Hello everybody, good evening. This is Mohammed Ashik Khan, your usual presenter, the Managing Director of ST Training and Managing Partner of ST Auditing. Once again, we continue with our continuous question series of mock paper, Financial Accounting of ACCA Fundamental Levels. So let's continue with the question where we stopped in the last recording. So we will continue today with question number 14. Which two of the following items must be disclosed in the note to the financial statements for intangible assets? If you try to recall, intangible assets coming from IAS 38, intangible assets coming from IAS 38, that mainly discusses research and development and other pertinent intangible assets, goodwill, patent, royalty, and any other respective intangible assets. The question here what they are asking is, which two of the following items must be disclosed in the note to the financial statements for intangible assets? Now, when we talk about disclosing financial information in our financial statements, we have to comply with what are the conditions stipulated in the IFRS or any given particular standard. Here, what we talk about IAS 38. So, IAS 38 disclosure requirement. So that IAS 38 disclosure requirement, let's read the options here. The first one, the useful lives of intangible assets capitalized in the financial statements. So when we presenting and disclosing the intangible assets, one of the requirement or requisite compliance with IAS 38 is that we have to specify the useful lives of intangible assets. As you probably know, intangible assets are either having indefinite life or having definite life, and when any intangible assets having definite life, then we have to talk about amortization. For these purposes, we have to disclose the useful life. So answer number 1 is required, and it's a correct answer. The second one, description of the development projects that have been undertaken during the period. It is not compulsorily that we need to disclose as part of IAS 38. So that is not a disclosure requirement. And answer number 3, a list of all intangible assets purchased or developed in the period. That again, you don't really need to put down all the list item by item on a line by line basis in our financial statement. That is at the next level presentation, which you can look into the ledger or any other information that is available within the company. Fourth one, impairment losses written off intangible assets during the period. This is another requirement. So answer will be 2 options you need to choose, first and the last. So that is question number 14. Now we go to question number 15. So we moving on to question number 15 now. Which of the following statements are correct? Capitalized development expenditure must be amortized over a period not exceeding 5 years. Now, if I try to refer the provisions in IAS 38, what they are saying is there are 2 types of intangible assets. Those intangible assets having limited life or definite life, and those intangible assets having indefinite life. For those intangible assets whose life is indefinite, we will not amortize any such intangible asset. All what we do is that we will carry out a review for impairment on a regular period, usually yearly. Whereas if the intangible assets life is definite, then you may have to amortize based on the number of years that asset will last. There is no any connection to this 5 years here. The 5-year story coming from the previous version of IAS 38. But however, that has been revised, and the latest update we don't require any such notification or requirement for 5 years. So answer number 1 is wrong. If the answer number 1 is wrong, then option number 3 and 4 is out. So it is between option number 1 and 2. Let's read the second option. Capitalized development costs are shown in the statement of financial position under the heading of non-current assets. Obviously, it's correct. All capitalized development costs are satisfying the condition of a non-current asset. So that should be disclosed in non-current asset caption. Option number 3. If certain criteria are met, research expenditure must be recognized. No, this is also incorrect. All research expenditure must be written off. There is no such requirement that if certain criteria are met. Actually, that is for development expenditure. So answer number 3 also wrong. So answer 2 only correct. So the first option is the correct answer. Let's move on to the next one. The following transactions relate to our company's electricity expense ledger for the year ended 30 June 2019. Prepayment brought forward 550, cash paid 5,400, accrual carried forward 650. What amount should be charged to the statement of profit or loss in the year ended 30 June 2019 for electricity? Let's work out this question. What you do is that you open a T account, electricity account. They say that there is a prepayment. How much? Let's find out. 550. And then the accrual is 650 closing balance. So when accrual closing balance 650, you have to record it like this here. And next one is cash payment. We paid 5,400. Please think about the double entry for cash payment. We credit cash book and we need to debit electricity account. So here we debit that. How much? 5,400. So that is cash. Now what we do is that we balance this account. Simple as that. Let me grab my calculator. 550, 5,400 plus 650, that comes to 6,600. And this 6,600 will be reported in the profit and loss account as an expense. So this is the answer for this particular question. Let's find out. So we have 6,600, that is option number 1. With this, let me stop my discussion here and I will continue the remaining question in my next recording. Thank you so much on watching this video. Kindly subscribe if you have not done so, and also share to any of your connected network people, and also don't forget to press the bell button. Thank you so much.